Anant Goenka, Senior Vice President FICCI, Shri Vijay Chandok, Co-Chair FICCI Capital Markets Committee, Shri Nehal Vora, MD and CEO Central Depository Services Limited, Shri Sunil Sanghai, Chairman FICCI Capital Markets Committee, Sushri Abhashet, Director General FICCI, members and leadership of FICCI, SEBI senior officials, representatives from NSE members, dignitaries from the industry and capital market institutions, media personnel, ladies and gentlemen. Good morning. I thank FICCI for inviting me here to the 22nd Capital Markets Conference, having addressed earlier editions of CAPAM. I must say that each year, the progress enables us to speak of stronger growth and greater opportunities. At the outset, I congratulate FICCI's leadership for its unwavering commitment to nation building. Since inception, FICCI has been a thought leader and a vital bridge between industry and policymakers, especially in capital markets. India's strength amid global uncertainty is now for everyone to see. India today stands strong in fragmented and challenging world. While global economies grapple with persistent geopolitical conflicts, supply chain realignments, and trade tensions, India has emerged as a beacon of resilience. India has signed a free trade agreement with UK recently and is on course to expand trade horizons further. Despite short-term hiccups, under the leadership of our Honorable Prime Minister Shri Narendra Modi ji, deep structural reforms and bold development measures have been announced and are reinforcing our fundamentals. The outcome is visible. India remains the fourth largest and one of the fastest growing economies on its way to become the third largest economy in the world. In his Red-Fort address, Honorable Prime Minister set a clear agenda of self-reliance, innovation and inclusive growth, signaling broad reforms in streamlined taxation, greater private participation, technology-led development and strong support for youth employment, backing indigenous semiconductors, advancing energy security and clean energy, strengthening pharma, R&D and IP protection, and urge the youth to innovate, build and lead. Our capital markets have emerged as the fourth largest capital markets in the world, a reflection of India's aspiration and strength. More than 2,800 companies are now listed on NSE. NSE started with only 200 permitted to trade companies. In just 30 years of its operations, equity market capitalization of India has grown 125 times, crossing 450 lakh crore or $5.2 trillion. Market capitalization has grown more than 6 times in last 11 years since 2014. In financial year 24-25, NSE mobilized 18.7 lakh crore via equity and debt put together, out of which 14.2 lakh crore was in debt and 4.3 lakh crore in equities. Fund mobilized through NSE were much higher than the incremental credit offtake by banks to industry and services during this period. NSE ranked among the highest globally in IPO mobilization, facilitating 268 IPOs in calendar year 24 that raised 1.67 lakh crore. For decades, Indian households stored wealth in gold, real estate, deposits, and other traditional avenues. Today, 1 in 5, or even larger, 1 in 4, I would say, households now invest in equities. That is 22 to 25% of all Indian households now invest in equities. And a third of India's wealth is represented by NSE. In this sense, NSE and our markets have truly become custodians of household wealth. NSE has now over 11.8 crore unique investors across 23 crore accounts covering 99.85% of all PIN codes, except just 28 PIN codes, most of which are airports where we can't do KYC today. There has been a 7 times increase in number of investors in 11 years from 1.65 crores in May 2014 to 11.8 crore today. The investor landscape has also transformed. Youth participation is rising. 40% of all investors are now under 30, with the median age falling to 33. About 1/4 of all investors, 25% of all investors are women. Mutual fund SIPs flows are robust, averaging 26 to 27,000 crore monthly, reflecting maturity and discipline. Passive products now form about 17% of mutual fund AUM, pointing to a longer-term goal-oriented participation. This spread, inclusivity, and resilience exemplify the democratization of markets in India. Indian markets have been a strong avenue for wealth creation. Retail investors, directly or through mutual funds, now hold 18.5% of India's market capitalization, up from 10.9% in 2014. Their wealth has grown 5 times since March 2020, reaching 84.7 lakh crore. Estimates suggest households' wealth accretion of rupees 46 lakh crore in the last 5 years alone. Nifty, which turned 29 this year, has grown by about 11.5% in rupee terms in CAGR and about 8% in US dollar terms, which has given similar returns to S&P 500 and higher than gold. Just like in the cash market, what matters in the derivatives market is the value being traded. In other words, not the contract size, but contract value, where India trades only about 20% of US options premium. And as we know, US doesn't trade too much of index options. They trade stock options, and sometimes one single stock options traded, like Tesla, trade larger than India for the month. So it's again not correct to say that India is the derivatives capital of the world, but we have been made to believe that. India's capital market growth is a collective success of investors, issuers, governments, regulators, members, industry bodies, and all participants. At the heart is SEBI, the guiding force shaping our markets. SEBI's 3 core objectives, investor protection, market regulation, and market development, have been our North Star. Chairman Shri Tuhin Kanta Pandey is further deepening these markets, strengthening governance, reducing frictions, and improving ease of doing business. The theme of this 22nd edition of CAPAM, driving growth through innovation, technology, and transparency, could not be more relevant. Under SEBI's robust oversight, India has pioneered globally. NSE is the first successful true digital public infrastructure of India. It's also the first successful automated order matching system in the world, with electronic screen-based trading replacing paper, satellite connectivity, predating nationwide online banking. This catalyzed India's IT revolution with NSE as country's first and still the largest fintech. Many firsts followed: dematerialization, centralized clearing, real-time risk management, derivatives, ETFs, faster settlement cycles, often ahead of advanced economies. Institutions like NSDL, CDSL, NCL, etc. have brought certainty, reduced risks, lowered costs, and improved ease of doing business. NSE is among the most technology-advanced exchanges globally, processing on peak days over 2,000 crores in 6 hours and nearly 30 crore trades via 2.2 plus lakh terminals across India. When NSE started, the largest exchange in the country used to not be able to do 10,000 trades in a day. So we have come a long way since then. NSE operates 6 state-of-the-art data centers with 17,000 plus servers, 30 plus petabytes of storage, and 2,000 plus full rack equivalents for members and itself. In terms of speed, for me, speed is important, but beyond a particular level, speed doesn't matter, because matching of trades below a particular response time wouldn't matter to investors. But just to ensure that India remains on top of the world in terms of the speed of transactions, NSE has now started matching in at least one market trades at nanoseconds response. In 1 second, there are 1,000 milliseconds, 10 lakh microseconds, and 10 raised to 9. There is 100 crore nanoseconds. So we have started now matching in nanoseconds range, and that puts us as the fastest stock exchange in the world by miles compared to any other exchange. And that is basically to show that India is still calling shots, not only in technology, but also in thinking about the markets. We regularly run full-scale live operations from disaster recovery systems to assure continuity. Our Cyber Defense Center uses real-time threat intelligence, analytics, and anomaly detection to mitigate risks, especially during geopolitical events. During Operation Sindoor, in one specific 20 minutes period, we got 40 crore attacks, and we could successfully ensure that NSE's group's websites continue to function for the users. We have simplified user access and compliance and are moving to nanosecond response, as I said, in select segments. We are also embracing generative AI to improve productivity, regulatory reviews, investor communications, and operational efficiency. Markets cannot thrive without trust. In 30 years of its operations, NSE has lived by its founding principles of enabling fair, efficient, and transparent trust markets. We celebrated our 79th Independence Day. I many times say that in 78 years of our independence, what did we achieve? We achieved trust of our investors, trust of our normal citizens in our entrepreneurs. And that is what the trust markets are all about. SEBI and NSE have served as torchbearers of governance, ensuring robust disclosure norms, risk-based supervision, real-time surveillance, and fair market practices to bring this trust into play. India's rights architecture, especially of majority of minority, no golden shares, stronger independence norms, tighter related party transaction oversight, and rising board diversity have created protections that are often larger than global practice. Corporate governance has moved from rule book to strategy, with valuation and cost of capital responding to quality of disclosure and board conduct. India's governance goal is simple: fewer surprises, faster truth. Together, innovation, technology, and transparency have created a virtuous cycle, making India's capital markets a key pillar of growth in powering India's rise. Honorable Governor of Maharashtra, Shri C.P. Radhakrishnan said last year at NSE that without capital, there is no Viksit Bharat. And these markets are going to provide the capital that is required for Viksit Bharat. For me, I have no doubt that India will become Viksit Bharat on the back of NSE. And all the members of NSE also deserve kudos for bringing markets to the smallest and the largest investors and to the remotest corner of India. A tree or a seed planted in 1992, that was NSE, has now become a Kalparuksh, which will give what India requires in the future. As we look ahead, our mission remains clear: channelizing India's vast savings towards productive capital, facilitating fund mobilization, fueling entrepreneurship, wealth creation, capital formation, and job creation. In doing so, we are not just strengthening investment returns, but shaping India's destiny as a developed nation. And FICCI's role in this journey is also vital. I am sure under SEBI's guidance and together with all stakeholders, we will ensure that Indian capital markets with innovation, technology, and transparency at the center will continue to be a strong engine that powers India's inclusive growth to a Viksit Bharat. Thank you. Jai Hind.
Thank you, Mr. Chauhan, for your enlightening address and also sharing how state-of-the-art technology has kept our trust in our exchanges intact. Moving on, we would like to commemorate this day as we present to this August gathering a compilation of articles contributed by members of FICCI's Capital Markets Committee. These deeply insightful articles bring to fore some of the key themes essential for growth of our capital markets. We request Chairman to release the expert's voice. A compilation of 10 articles on the conference theme. The publication is available on FICCI CAPAM website. Thank you, sir. And I would now like to invite our esteemed chief guest to share his thoughts and insights with us. Sir, we deeply value your support to FICCI's efforts in strengthening India's capital markets and greatly appreciate the balance you bring between market development and regulation. Over to you, sir.
Shri Anant Goenka ji, Senior Vice President FICCI, Shri Sunil Sanghai, Chairman FICCI Capital Markets Committee, Abha Seth ji, ADG FICCI, Shri Ashishkumar Chauhan, MD and CEO NSE, Shri Vijay Chandok, MD and CEO NSDL, Shri Nehal Vora, MD and CEO CDSL, leaders of India Inc., market participants, members of the media, ladies and gentlemen. I am delighted to be here at CAPAM 2025. Thank you, FICCI, for the opportunity to share my views on the conference theme, Driving Growth Through Innovation, Technology, and Transparency. This theme is not merely a catchphrase. To me, it's a collective paradigm that the capital market ecosystem needs to adopt and achieve. Today's deliberations in several sessions are for constructive engagement and reflection, for asking questions and finding answers, for identifying challenges and opportunities, and for raising doubts and providing solutions. As you all know, India's securities market has scaled rapidly. We are looking good on several key parameters, such as number of unique investors, 13 crore or about 130 million, mutual fund investors, 7 crore, which is about 70 million, healthy primary market, which is 4.3 trillion rupees raised in FY25, a strong fundraising pipeline, 1.4 trillion rupees can be raised going ahead. Equity assets held by FPIs is 72 trillion rupees, and ownership in listed entities by domestic investors as of June 25 quarter of 19%. We have growth momentum with us. It's time to convert it into a flywheel. Robust regulatory framework that increases transparency and technology, which in turn increases trust in the system and a greater investor participation and a deeper and more liquid market, a better price discovery, the lower cost of capital, and in turn, greater investment and innovation. I note that there are interactive sessions on two critical areas today. One is on financing the future, and another one on sustained capital formation amidst rising domestic participation. I'm sure the panelists will provide their valuable insights on a range of issues such as mutual funds, AIFs and other new instruments, corporate bond market, municipal and infrastructure financing, investor awareness and education, and responsible diversified investing. Key questions for you to reflect today: which reforms are necessary to incentivize and actively engage capital issuers and long-term investors on a sustained basis for faster capital formation? The second, are our incentives, disclosures, controls, boards, and capabilities aligned to our aspiration of a much larger and deeper capital market? What efforts do we need to make? Innovation. For what? To cut friction, deepening and diversifying markets. Innovation in capital market must lower friction and compliance costs for issuers, investors and intermediaries while managing the risk. It should also provide diverse range of opportunities depending upon risk appetite. That's the bar we must set for ourselves. At SEBI, we have worked to shorten IPO timelines to enable safeguards such as blocking of funds and direct payout, and to establish digital processes that reduce cost and time for everyone. The UPI valid subsystem for SEBI-registered intermediaries will soon be rolled out as a verified payment channel to protect investors in securities market from cyber frauds. It will come into effect as of 1st of October 2025. SEBI has already issued the necessary guidelines in this regard. These steps matter to first-time investors and to institutions that manage risk. Innovative regulatory approach has helped establish new asset classes, new class of investors, and new methods of raising risk capital. AIFs, REITs, InvITs, SIPs, SIFs, PMS, these acronyms now occupy important place in Indian capital market. We need to constantly create new products and new opportunities while co-creating with industry and investors optimum regulations for such growth areas. With a booming IPO market, investors are eagerly anticipating what is next. Yet, pre-listing information is often not enough for investors to take an investment decision. Can we think of an initiative on a pilot basis for a regulated venue where pre-IPO companies can choose to trade subject to certain disclosures? Here are some key challenges. Which are the unnecessary processes and pain points that cause avoidable friction in fundraising, disclosures, and investor onboarding, and how they can be removed? Which emerging areas, products, and asset classes can be developed for creating both demand and supply of capital? Let me come to technology, the second part of this theme for today. Technology is a trust multiplier, not a showpiece. Indian capital markets have constantly evolved technologically. Great tech starts with having the core infrastructure in place, reduced settlement timelines, direct payouts, resilient MI systems, market surveillance, and grievance systems. SEBI has been in the forefront of applying and promoting SupTech and RegTech solutions. That is how investor trust multiplies. But trust fails at the edge, where investors meet the market sometimes. There are many instances of fake apps, cloned websites, and unregistered entities misleading investors. We are working with social platforms to take down misleading market content before damage spreads. We'll intensify our investor awareness and education campaigns on pernicious cyber frauds. Scores has been revamped to cut grievance timelines. Smart ODR is live and has resolved 7,000 disputes worth about 500 crore. These are safety nets that give first-time investors the confidence to stay invested. On the industry side, we expect clean edges, no unregulated advice, clear and timely disclosures, and visible SEBI registration details on every app, site, and social media handles. We have to address the rise of artificial intelligence. AI has the potential to unlock new forms of customer engagement, enable alternate approaches to risk assessments and monitoring, fraud detection, and financial inclusion. At the same time, increased adoption of AI could amplify existing challenges to data protection and cybersecurity, among others. We have to think of AI as an assist, not a substitute for judgment. SEBI's proposed guiding principles for AI/ML emphasize a tiered approach, data and cyber controls, and clear accountability. RBI's Free AI Committee report also complements this. The message from regulators is consistent: adopt AI, but with safeguards. The quick question here: are our organization and boards equipped to guide on responsible AI adoption, to balance innovation with accountability? Transparency, the third theme of the conference today. The welcome mat. Transparency is how first-time investors say yes. For new investors, three things matter: clarity, comparability, and fair rules that are enforced. As a system, we need to push for clearer communication with investors, faster rumor verification, and incentive disclosures so investors know who gets paid for what and when. If a SEBI-registered intermediary offers services outside SEBI's ambit, it must say so upfront, along with the risk and recourse. Transparency attracts long-term capital, keeps capital durable, and widens retail ownership. SEBI's regulatory approach has been and will remain consultative. A thought for discussion here: how can our platforms make new client onboarding easier without mis-selling? Let me come to way ahead. The task of capital formation in the face of global headwinds, in the era of geopolitical and geoeconomic fragmentation, is a daunting challenge. We need to put our heads together to meet the challenge. At SEBI, it has been our conscious effort to simplify and rationalize our regulatory framework for ease of doing business, without diluting our firm resolve for investor protection. Between March and June 2025, we have approved several ease of doing business proposals for listed companies, AIFs, and FPIs. Our momentum toward optimum regulation continues. We have already issued multiple discussion papers in consultation with industry and public to carry out further simplification and promote capital formation. There is much we can achieve together. SEBI's approach in relation to equity derivatives has been thoughtful and consultative. We are looking to deepen the cash equities market, which is the true foundation of capital formation. Volumes in cash market have grown rapidly, doubling in terms of daily traded volumes over a period of just 3 years. However, much more needs to be done. We have often stated that equity derivatives play a crucial role in capital formation, but we must ensure quality and balance. We will consult with stakeholders on ways to improve, in a calibrated manner, the tenor and maturity profile of derivative products so that they better serve hedging and long-term investing. Ensuring risk awareness and suitability is equally important, and constructive ideas for proper stakeholder engagement will be much needed to achieve this goal. I'm sure the deliberations today in CAPAM conference will enrich the discourse and provide key takeaways for us all. Thank you. Jai Hind.
Yeah, I got. Thank you, Chairman. Chairman has kindly agreed to take a few observations and the questions. And before we start that, I also want to acknowledge the presence of the whole-time member of SEBI and other senior officials of SEBI, Mr. Dangeti and others. Before I turn to the audience, sir, one quick observation, if you want to elaborate on that from your speech I picked up. You asked a question that should we be having unlisted company or to be listed company traded. This is one area where we have actually made a lot of representation. We have shared our views and we will definitely support. Maybe would you want to elaborate on that to start with, and then we can go to further question.
Actually, I raised, as you said, you must have noticed that I've raised a lot of questions on you. So therefore, I think that is what the conference about, because during the day we will have lots of time for discussions. But this is one area where there'll be a possibility to open a platform, maybe with some exchange, and we can work out with the Ministry of Corporate Affairs in this regard.
Thank you.
Not truly a space in that respect for us, unlisted, but then it's a gray area, kind of those who are coming for listing. There is a pre-listing processes, and maybe if the companies are readier for IPOs in that fashion, that gives you that much extra information for everyone.
And this is prevalent in some other markets. So this is something which has already happened, and we do have Ministry of Corporate Affairs later in the day, and we would raise this with them as well. Can I take 3 or 4 questions? We don't have time for a lot. Maybe you can just identify yourself, introduce yourself, and if I can, while you are thinking about, if I can come to Sonia Dasgupta, CEO of JM Financial, to start this, and then anybody else who is interested. Can you reach the mic to Sonia? No, I came to Sonia.
Time काफी हो गया, सुनील. ये overshot the time.
Hi, thank you, Chairman, sir, and all the dignitaries. Indeed, we are all very invested here to make India a great place to invest. And with that, since we have the benefit of having so many intermediaries, I want to flip the question and ask Chairman, sir, what is it that you wish from the intermediaries to strengthen the capital markets and work shoulder to shoulder with you? Because we are always asking you for things. We'd like to hear what you would want from us to make India a great place to invest.
I think those are the questions I raise in my speech. When you have 3 pillars on this conference is about, and at every time I said that here is a question, here is a challenge, and I think during the time the ministry has to work together to really work out, 1, 2, 3 can be done, and includes what we really need to improve from the regulator side, but also to put together how you can also contribute. So it's like a working together approach, but the key question is that we should not be really complacent with what we have achieved, but what we can do better. So in order to do better, we must really find out where we can reduce costs, where we can have without risk mitigation, without really diluting on risk mitigation, we can reform things, change regulations, modify approaches, improve technology. So, I mean, this collective brainstorm will give you a lot of thoughts and also then subsequent follow-up in order to work out on details.
So,
This is the last.
so my name is Royston Braganza. One of the points you mentioned was innovation. I've just come back from Sevilla with Madam Sitaraman, where the whole private finance for development and sustainability is discussed. It's about $40 trillion an opportunity. The global north has its own challenges. The global south is looking to India, whether it's Brazil and now Joburg for the G20. You have a very innovative manner in the social venture fund. Ashish is looking at a social stock exchange and different varieties. What is the way that India can really lead the world in showing ways to bring new pools of capital to asset classes that are now available? Ajay Banga talked about bringing in $30 billion of catalytic pools of capital. That can really unlock a huge amount of private capital in India for the impact and sustainability sectors. Would like your thoughts.
My name is Vineet Nahata. I represent Power Guild Treasuries. I am also a board member of the Central Board of Trustees of EPFO. Sir, I underscore the priority assigned by SEBI in deepening and strengthening the Indian debt markets. I would like to draw your attention on two major challenges faced by the debt market players. The margin requirement in refinancing against the pledge of fixed income securities in MTF is presently 50%, which is equivalent to equity, which should be much lower as the fixed income securities carry much lower risk. The debt derivatives in interest rate futures, interest rate swaps, they need more traction and liquidity. A lot of awareness needs to be generated, and training and inculcating of the culture of exercising these options needs to be developed in the debt markets. Credit default swaps is one area which holds great potential, and this should be prioritized by the investing fraternity to look into it, sir. Thanks a lot, sir.
All of these are good suggestions, both yours as well.
Yeah, we'll take just one last, Latika ji, and then we'll have to, chairman has to leave. So Latika ji from Metropolitan Exchange.
Thank you. Good morning, Chairman sir. And this is just a very small basic, I know that we are all interested in knowing your vision. You have clearly said you would like to know as to what we would like to contribute. And from Metropolitan Stock Exchange, being the youngest and the smallest exchange, we definitely imbibe with the theory that innovation is a key, and we want to commit to the growth of new products on debt. I know the industry has been voicing in the closed door as well as now as to how we can grow those new asset classes, and how is it that we can get our retail base more confident as well as creative. We would like to participate with SEBI. We give our commitment that we would like to take that step forward. And while I would still like to know your vision, for us MIIs as to how you would like us to participate, maybe that can again be on a one-to-one conversation we can continue. But we definitely want to be part of this growth journey, which is very much, required. Thank you.
Thank you very much.
Thank you, ma'am.
Thank you.
Sorry. So thank you, Chairman, for your insights, for your insightful address, and for patiently taking the questions from the audience. I would request Mr. Vijay Chandok, co-chair of FICCI's Capital Markets Committee, to deliver the concluding remarks. Mr. Chandok is MD and CEO of National Security Depository Limited, one of the largest depositories in the world and now listed.
Thank you very much. Respected Chairman SEBI, Shri Tuhin Kanta Pandey, Shri Ashish Chauhan, MD and CEO of NSE, Mr. Nehal Vora, MD and CEO of CDSL, Mr. Goenka, Senior Vice President FICCI and Vice Chairman of the RPG Group, Mr. Sunil Sanghai, Chairman FICCI Capital Markets Committee, all the distinguished members in the audience, members from SEBI, members from industry, members from press. A very good morning, ladies and gentlemen, to all of you. Thank you for taking time in attending this CAPAM. It is indeed a matter of great honor for me to offer the closing remarks for the inaugural session of the 22nd CAPAM centered around the vital themes of, and we've spoken enough about it, driving market growth through innovation, technology and transparency. On behalf of FICCI and everyone else who are present here, first and foremost, I would extend my deepest gratitude to our chief guest, Shri Tuhin Kanta Pandey, for clearly articulating some of the points that he did. Sir, your very, very insightful comments, followed by some very insightful and incisive questions, are indeed thought-provoking, and it clearly lays two things before us. I think first, the opportunities that one can delve into, and secondly, the importance of working together and co-creating solutions for harnessing this opportunity. Well, as a fastest growing economy in the world, I think India stands at a unique inflection point, and we've again discussed about it through the earlier session as well. And to achieve our aspiration of becoming an Atmanirbhar economy, and that becoming more so important in the context of current geopolitical situation, I think the capital markets must play a central role in mobilizing resources for various things: infrastructure, green growth, we spoke about that, for innovation-driven enterprises. And this will not just require depth and liquidity, but also resilience and inclusivity. FICCI believes that the industry has a significant role to play alongside the regulator to ensure that our capital markets ecosystem stays efficient and globally competitive. We have therefore chosen to focus on three levers today, and we've again spoken about this: innovation, technology, and transparency. As has been already highlighted, innovation keeps market dynamics competitive and aligned with the evolving needs of technology and the evolving needs of economy. And the ecosystem collectively needs to explore and experiment with new financial instruments which bring in long-term patient capital. It is time to push the pedal on various products, new products like green bonds, InvITs, REITs, which are growing and can grow many-fold from here. Technology is making our markets more inclusive, responsive. It has completely transformed how our markets used to operate when we began our careers a long time ago. And it has not just improved efficiency, but has made the markets more inclusive and trustworthy. Engagement of the retail investors in capital formation has been really made possible through technological adaptations, and that was brought out in the sessions that we had earlier. And finally, transparency. At the heart of robust market lies trust, and trust rests on transparency. Strong disclosures, credible auditing practices, sound governance standards are not just compliance requirements today. They are essential to inspire confidence amongst domestic and global investors alike. It is widely accepted that transparency needs to become a part of our corporate culture. It's just not a regulatory expectation today. Sir, your leadership has encouraged us to commit ourselves to build markets which are not just deep and liquid, but also fair and inclusive, not just efficient, but also accessible. Today, we have also privileged to hear the convergence of ideas and vision from industry stalwarts, Shri Ashishkumar Chauhan ji, Shri Nehal Vora, Mr. Goenka, Sunil Sanghai. Their insightful remarks have underscored, I would say, the critical role that technology, trust, and transparency plays in building Indian capital markets ahead. Sunil, thank you for highlighting that in the next few years we are going to be adding another capital markets and we have to prepare for that. Nehal for highlighting what is below the iceberg, and Shri Ashish ji for highlighting that with so much of data that NSE has indeed become custodian of household wealth today. A landmark highlight of today's session was also the launch of the FICCI latest publication, The Expert Voice, by our chief guest, Shri Tuhin Kanta Pandey, chairman of SEBI. This initiative not only recognizes the perspectives of thought leaders shaping our markets, but also reaffirms our collective commitment to knowledge sharing and industry best practices. As we proceed with today's agenda, let us carry forward the key messages, which is embracing new technologies, reinforcing transparency, and working collectively to sustain growth and deepen investor confidence. The future of India's capital markets rests on our ability to adapt, collaborate, and inspire trust amongst all the participants. On behalf of FICCI, my sincere thanks to all the speakers, partners, and delegates for your contributions and engagement today. A special thanks once again to our chief guest, Shri Tuhin Kanta Pandey from Chairman SEBI. Now I would encourage everyone to make most of the sessions ahead, continue networking, and together let's shape the resilient, innovative market system. I look forward for the sessions which are to come. We have a galaxy of speakers, Dr. Arunish Chawla, Secretary DIPAM, Ms. Deepti Gaur Mukerjee, Secretary Ministry of Corporate Affairs, Mr. Anant Narayan, member from SEBI, Amarjeet Singh, again member from SEBI, and just after this we have Mr. Varshne, whole-time member SEBI, interesting session to look forward to. With these thoughts, I officially conclude the inaugural session. Thank you and wishing everyone a productive CAPAM 2025.
Thank you, Mr. Chandok, for that incredible encapsulation of all the speakers. And with that being said, that is a wrap of the inaugural session. But with that, we have a and